Hi everyone. Hi guys, this is Sheetal Chaudhary, your accounts master teacher. And I welcome you all to Vedantu Commerce. We all are here for a better future. So, how are you all? कैसे हैं आप लोग? I hope that all of you are good and safe. So, today we are going to continue our sample paper solving and we will be solving 8 marks question today. As we have already solved 1 mark question, 3 marks question, 4 marks question and 6 marks question. So today we will be solving 8 marks question, and if any of you have not watched the previous sessions, then please watch them. So, I hope that all of you have now registered for V.O.T.E because we have only one day left now, that is 18th April. And participating in V.O.T.E is very compulsory because ये सिर्फ exam नहीं है, this is comeback. So make a comeback this year with Vedantu Online Talent Exam, which is V.O.T.E. Because this is all free exam. There will be no registration charges, no fees, nothing. And by participating in V.O.T.E, you can get all India rank. You can get guaranteed scholarship from a pool of rupees. I'm sorry. You can get guaranteed scholarship from a pool of rupees 500 crore. Also, you can win exciting prizes daily or weekly worth rupees 1 crore. And the most amazing thing that you can become CEO of Vedantu for 1 full day. Also, you can win a trip to NASA. So, if you want to win all these exciting prizes like drone, telescope, mobile phone, watches, laptop, AirPods, and many other exciting prizes, then go and register yourself now for V.O.T.E. And if you don't know that how to register, so let me tell you that we have provided the link in the description box below. Go to that link and enter your details like name, grade, board and target. Once you enter your details, then register yourself, after which your voter ID card will be generated. And after this, you have to select your voting days, that on which day you want to give a vote. And then it's all done. In these 3 simple steps, you can register yourself for V.O.T.E and make a comeback. Now, are you worried about the complete details, or if you don't know complete about V.O.T.E? So if you want to know more about V.O.T E, you can either check out our website or you can download our mobile app where the complete information about V.O.T E is available. Also, if you are worried about the exam pattern, exam format, then let me tell you that there will be total 3 subjects: accounts, business studies and economics. Every subject will have 30 questions. So total there will be 90 questions. Every right answer will give you 4 marks and every wrong answer will give you -1. So yes, there will be negative marking also. And the time duration will be 90 minutes or 1.5 an hour to attempt this exam. Hi Shantanu. So now if you guys don't want to participate alone, then let me tell you a good news that you can play along with your friends. You can participate along with your friends. So go and create your own squad right now so that you all can participate together and play together, and also you can win exciting and big prizes together. So this is how you can make a comeback this year with V.O.T.E. So guys, if you have not registered yourself yet, then go and register yourself now. So this is your today's schedule. After my session, we will be having 5 more sessions, At 4 p.m. of Disha Ma'am of Economics. At 6 p.m. of Disha Ma'am of Economics. At 7 p.m. of Accounts. At 8 p.m. of Mathematics. At 9 p.m. of Economics. So this will be your schedule for today. Now, as you all know, this is class 12th accountancy session, and this is for those students who will be now appearing for boards in May 2021. So, if you guys are new to our channel Vedantu Commerce, or if you're watching this phase for the first time, then please take a moment to subscribe to our channel. Also, make sure that you like this video and you share this along with your friends. And if you guys want to receive our notes in the PDF form, then you have to join us on Telegram group Vedantu Commerce. The link of this group is also provided in the description box below. So go and join this group ASAP if you haven't joined it yet. Now starting with the today's class, with the today's session, sample paper solving accountancy. And this is the last part of your sample paper 2. So today we will be discussing 8 marks question, after which the sample paper will be over. So now tell me, are you guys ready for 8 marks question? Are you guys ready for this session? Yes or no? Come on, tell me, are you guys ready? It's bad to see that no one replies. Come on, tell me guys, are you ready or not? I hope that you are ready because I'm not getting any replies. So now first of all, we have to read the general instructions very carefully. हमें general instructions को ध्यान से पढ़ना है. And in this general instruction says that your question number 21 and question number 22, these two questions will be long answer question, which will be of 8 marks each. So there will be 2 questions of 8 marks each. That means 16 marks. So starting with the 8 marks question, and first question is question number 21. Okay, Ravindra. So now this is our first question. And the question says that Gautam and Yashika, they are partners in a firm, sharing profits and losses in the ratio of 3:1. There are 2 partners, Gautam and Yashika, and their ratio is 3:1. The balance sheet of the firm as at 31st March 2018 was as follows. The balance sheet is given to you. Now, we will first analyze the balance sheet, that whether there is any reserve, accumulated profit or accumulated loss or not. सबसे पहले हम balance sheet को ध्यान से देखेंगे कि कोई reserve तो नहीं है, existing goodwill तो नहीं है, कोई reserve, profit and losses तो नहीं है. So, as we analyze the balance sheet, there was nothing in the balance sheet. No accumulated loss, no accumulated profit and no reserves. Now, after the balance sheet, it is said that Asma is admitted, a new partner is admitted for 3/8 share in the profit with a capital of 2,10,000 and 50,000 for her share of goodwill. The new partner Asma is admitted for 3/8 share in profits with a capital of 2,10,000 and profit and goodwill of 50,000. It was decided that new profit sharing ratio will be 3:3, 3:2:3. So now I have to disappear. Old ratio is given. Okay. So there are 2 partners. There were 2 partners, Gautam and Yashika. Then a new partner, Asma, was admitted. The old ratio was 3:1. But now the new ratio will be 3:2:3. So as we all know that this goodwill is to be distributed in the sacrificing ratio. This goodwill is to be distributed in sacrificing ratio. So we will calculate sacrificing ratio. We will calculate sacrificing ratio, and it is equal to old share minus new share. Old share minus new share. So Gautam sacrificing share will be equal to 3/4 minus 3/8. So take the LCM, it will be 8. 3 multiplied by 2, 6 minus 3, it will be 3/8. Gautam is sacrificing 3/8. Similarly, we will calculate the sacrificing share of Yashika. 1/4 minus 2/8, it will be 2 minus 2/8, it will be 0. So as we can see, we have calculated the sacrifices of partner. Gautam is sacrificing 3/8, but Yashika, she is not sacrificing anything. So in this, only Gautam is sacrificing. Only Gautam is sacrificing. So first of all, we will pass the journal entry for capital and goodwill. The entry will be cash account debit to Asma's capital account to premium for goodwill. So how much capital she is bringing? 2,10,000. And how much capital she is bringing? 50,000. So total cash brought by her is 2,60,000. Now this premium for goodwill, it will be distributed between the sacrificing partner. So the next journal entry will be premium for goodwill account debit to Gautam capital account. The whole of the goodwill, the total goodwill 50,000, it will be credited to Gautam capital account because only he is making a sacrifice. Yashika, the other partner, she is not sacrificing anything. So she will not get any share in the goodwill because goodwill is only credited to the sacrificing partner. So this will be the journal entry for goodwill. Now, the next we have machinery will be depreciated by 10% and furniture by 5%. So for this, we have to prepare revaluation account. For this, we have to prepare revaluation account. Particulars, amount, particulars, amount. So, machinery will depreciated by 10%. Your machinery is decreasing by 10%. It is a loss for you. So it will be recorded on debit side of revaluation to machinery. 10% of 2,10,000 will be 21,000. So to machinery 21,000. Then furniture is also depreciated by 5,000. So it is also a loss. So record on the debit side to furniture, it will be 5,000. Then the third point, stock was revalued at 2,10,000. Stock earlier, the book value of stock was 1,40,000. पहले कितने का stock था? 1,40,000 का. And now it will be of 2,10,000. So your stock is increasing. Your stock is increasing by 70,000. Your stock is increasing by 70,000, which is a profit. So profit will be recorded on the credit side by stock 70,000. Then we have some other point. The next point says that provision for doubtful debt is to be created at 10%. So we will create provision at 10% of debtor. So 10% will be 8,000, and provision, it is a liability. Increase in liability is a loss. So when you will create provision, it will be a loss. So it will be recorded on debit side. To provision for doubtful debt, it will be 8,000. Now we have recorded each and every item. So we will find out the profit or loss of revaluation. So 70,000 minus 34,000. The profit will be 36,000. To profit, it will be 36,000. So let me show you revaluation account. This is revaluation account. You can see that we have prepared it correctly. So this is your revaluation account. 70,000 minus 34,000. There is profit of 36,000. And this will be transferred to the old partner in the old ratio. So 36,000 will be distributed between Gautam and Yashika in the ratio 3:1. So Gautam will get 27,000 and Yashika will get 9,000. So this is how we will prepare revaluation account. We have recorded losses on the debit side, profit on the credit side. Then you will find out the balancing figure, which can be either profit or either loss. So here it is profit of 36,000, which is distributed among old partners in the old ratio. So now we have prepared a revaluation account. Then after revaluation account, you have to prepare partners capital account. We have to prepare partners capital account. Now, I am not going to read this last point, fifth point, because this point says that the capital of all the partner were to be in the new sharing ratio on the basis of capital of new partner. Any adjustment is to be done through current account. So this point, it is for adjustment of capital. This point is for adjustment of capitals, which is now deleted from your syllabus because of COVID-19. So this is not in our syllabus, therefore I am not going to read this point or do the treatment of this point. So we will ignore this point. So now we have prepared revaluation account. So now we will prepare capital account. It's time to prepare capital account. So how you will prepare capital account? First, you will record these opening capital. Then you will record this capital brought by the new partner. Then you will record goodwill entry and then revaluation profit. So let's see capital account. First, we will record opening balances 4 lakh and 1 lakh. Then we have recorded revaluation profit 27,000, 9,000. Then the new partner brought 2,10,000 capital. So by bank 2,10,000 capital of Asma. Then you remember that goodwill was distributed. I'm sorry guys. So we pass the journal entry for goodwill, and the journal entry for goodwill was premium for goodwill account debit to Gautam capital account. Goodwill was credited to the sacrificing partner capital account. So premium for goodwill debit to Gautam capital account 50,000 and 50,000. So in this journal entry, Gautam capital account is credited. In this journal entry, Gautam capital account is credited. So you will record on the credit side in the Gotham capital account 50,000 as buy premium for Goodwill. So it will be recorded on the credit side as buy premium for Goodwill. Now we have recorded each and every transaction. This has to be ignored because this is adjustment of capital, which is not in your syllabus. So now we will directly find out the closing balances. 4 lakh plus 27,000 plus 50,000, it is 477, and this will be your closing balance. 4,77,000. Then 1 lakh plus 9,000, it will be 1,09,000. And then 2,10,000, it will be 2,10,000. Meghna, this is not your session. You can ask your doubts at 7 p.m. Right now, we are solving the sample paper for the old class 12th batches. So now we have prepared the partner's capital account, and these are your closing balances. You will ignore this current account because this is adjustment of capital, which is not in your syllabus. So this is not in your syllabus. The closing balances will be 4,77,000 and 1,09,000. Now after this we will prepare balance sheet. After this we will prepare balance sheet. So balance sheet I am preparing with the help of this one. Now furniture will remain same. There is no revaluation in case of furniture. Okay, there is revaluation in case of furniture. Your furniture is depreciated by 5,000. So it is depreciated by 5,000. You will subtract 5,000 from 60,000. Then stock, it was revalued at 2,10,000. So now the stock will be 2,10,000. Debtors, from debtors you will subtract provision, that is 8,000. In cash in hand, you will add the capital of new partner and you will add goodwill. So in 90,000, you will add 2,10,000 and you will add 50,000. Machinery is depreciated by 10%. So from 2,10,000, we will subtract 21,000. So this will be your asset side. Now on the liability side, we will record creditors, that will remain as it is. We will record bills payable, it will remain as it is. The capitals, capital you have to record the closing balances of capital account. So Gotham capital was 1,77,000 or 4,77,000. Yashika capital was 1,09,000. And Asma capital was 2,10,000. So now the closing balances of capital account will be recorded in the balance sheet. So this is how you will prepare the new balance sheet. So this is your new balance sheet. Everything is same except these capital account and current account. So this is your first question. We have done preparation of capital account in this and revaluation and balance sheet. Adjustment of capital is there in this question, but it is not in your syllabus. So now tell me, is there any doubt in this question in revaluation account, in partner's capital account, or in any other point? So if you guys have any doubt, you can ask me in the comments box below. So tell me guys, is there any doubt? Okay. So now in this question, we have a choice. We have a choice in this question. I'm sorry. So this question that we have done right now, it is from admission of a partner. And you will get a choice in this question. And the another question will be from retirement. So we will get a choice between admission and retirement. So now let's do this question, which is also of 8 marks. So this question says that XYZ, they were in partnership, sharing profits in the proportion to their capital. They are sharing profits in the proportion of their capital, that is 9:6:3 or 3:2:1. This is their ratio, 3:2:1. Their balance sheet is given as follows. The balance sheet is given. Now, on the above date, Y retired owing to ill death. One of the partner is retiring because of ill health. So, the following adjustments were agreed upon for calculation of amount due to Y. These are the adjustments that have to be made at the time of retirement. So, now to record these adjustments, we have to prepare revaluation account. So, what we will do, we will prepare revaluation account. Just a minute. So, now we will prepare revaluation account. This will be our particulars, amount, particulars, amount. The first point is provision for doubtful debt is to be increased to 10% of debtors. Now your provision will be 10% of debtors. So 10% of debtors will be 2100. And your provision right now is 1400. So your provision will increase from 1400 to 2100. So it is increasing by 700. पहले provision कितना था 1400, अब कितना हो गया 2100. So it is increasing by 700. So to provision for doubtful debt, the loss is 700. Coming to the next point, goodwill of the firm, that we will read later because goodwill is not recorded in revaluation account. Coming on to point C, included in the value of sundry creditor was 2500. There were creditors of 2500 for an outstanding legal claim which will not arise. Now your creditors will not ask for money. So your creditors are not asking for money. It is your profit. Therefore, it will be recorded on credit side by creditors 2500. By creditors 2500. Next point. This is related to the again adjustment of capital and this is related to payment. So there are only 2 points that will be recorded in revaluation. So only these 2 items will be recorded in revaluation. So now you will find out the profit. 2500 minus 700. 2500 minus 700. There is profit of 1800 which will be distributed among X, Y, Z in their profit sharing ratio 3:1. So X will get 900, Y will get 600, Z will get 300. So 900, 600 and 300. This is how revaluation profit will be distributed. So now your revaluation account is complete. After the revaluation account, we are required to prepare कैपिटल अकाउंट, हमें क्या बनाने हैं, कैपिटल अकाउंट बनाने हैं. So now we will prepare partners capital account. So first we will record the opening capital as by balance brought down. Then you will record general reserve and workman compensation reserve. General reserve and workman compensation reserve, it will be distributed among old partners XYZ in old ratio 3:1. So by balance brought down 90, 60, 30. By reserve 3000, 2000, 1000. By workman compensation reserve 4500, 3000 and 1500. Also, we will record revaluation profit. So by revaluation 900, 600 and 300. Now after recording this, we will make the adjustment for goodwill. We have to record goodwill. So your second point, this, it is saying that, यहाँ पर क्या बोला है, goodwill of the firm be valued at 36,000. The total goodwill of firm is 36,000 and it has to be adjusted into the capital account of X and Z, who will share profits in the future ratio 3:1. Now there were three partners X, Y, Z. Their old ratio was 3:2:1. Now Y is retiring, after which the new ratio will be 3:1. So this will be the new ratio. Now you have to calculate the gaining ratio. So we will calculate the gaining ratio. And how we will calculate it? Gaining ratio is equal to new share minus old share. New share minus old share. So X will equal to, X gain will be equal to 3/4 minus 3/6. 3/4 minus 3/6. Take the LCM, it will be 24. 18 minus 12, it will be 6/24. Then we will calculate Z gain. So 1/4 minus 1/6. 6 minus 4, 24 LCM. 6 minus 4, it will be 2 by, just a minute. 6 minus 4, it will be 2/24. So they are sacrificing 6/24 and 2/24. So it will be 3:1. This is your gaining ratio. 6/24 X is sacrificing, 2/24 Z is, sorry, they are gaining 6/24 and 2/24. So 6:2. You can simplify it as 3:1. So this is your gaining ratio 3:1, in which goodwill will be distributed. So now we have gaining ratio. Gaining ratio is 3:1. So what is the journal entry for goodwill? The journal entry is continuing partner capital account debit. X capital account debit, Z capital account debit, to retiring partner to Y's capital account. First of all, in 36,000, you will find out the share of retiring partner. So 36,000 multiplied by 2/6. The share of retiring partner is 12,000. Y's share of goodwill is 12,000. This 12,000 will be distributed among X and Z in the gaining ratio. This 12,000 will be distributed among X and Z in the gaining ratio. So it will be 9,000 and 3,000. It will be 9,000 and 3,000. So now we will prepare capital account. Now we will prepare capital account. So the entry was X capital account debit 9,000, Z capital account debit 3,000 to Y's capital account 12,000. So in this journal entry, Y capital account is credited. So in Y capital account, we will record on credit side as by X 9,000, by Y 3,000. So total 12,000 is recorded on the credit side of Y capital account. Total 12,000 is recorded by X 9,000, by Z 3,000. Now X capital account is debited. So on debit side, we will record in the X capital account to, it will be Y, to Y 9,000. To Y 9,000, and in Z is also debited. So in Z capital account, we will record on the debit side 3,000. So this is how we will record the journal entry for Goodwill and how it will be posted to capital account. Now after recording this entry, you will find out the closing balances. We will find out the closing balances. In this question also there is adjustment given. Yahan par bhi, sorry. In this question also we are given one adjustment. So this D point, it says that X and Z also decided that the total capital of the new firm will be 1,20,000 in their profit sharing ratio. Actual cash to be brought in or paid off as the case may be. So this is also adjustment of capital which is not in your syllabus. So after recording goodwill, revaluation, general reserve, workman compensation reserve, you will directly find out the closing balances. We have to not do any adjustment. We will directly find out the closing balances. And then this point is in our syllabus. So it says that why retiring partner is to be paid 9,000 immediately. The retiring partner, the Y, will be paid 9,000 immediately and the balance will be transferred to his loan account. So now when we will prepare the capital account, we will find out the closing balance. So 60 plus 2 plus 600 plus 3,000 plus 9,000 plus 3,000. The total will be 77,600. The total is 77,600 of Y. The retiring partner closing balance is 77,600, out of which we have to pay him immediately 9,000. So to cash 9,000 we have paid immediately, and the balance will be transferred to his loan account. So 77,600 minus 9,000, it will be 68,600, which is transferred to loan account. So first we will find out the closing balance of the retiring partner, which will be either paid or which will be transferred to his loan account. You will not carry down the balance of retiring partner. And the balance of remaining partner, continuing partner, it will be carried down. So these are the balances of the retiring part of the continuing partner. Those who will remain in the business, so their capital will be carried down. So this is how the capital account will be prepared in the case of retirement of a partner. Now after that, you will prepare the balance sheet. So balance sheet, there are no more changes in balance sheet. Cash, it will remain not same because we have paid 9,000 to the partner. Out of 15,000, you will subtract 9,000, which is paid to the retiring partner. Debtors, from debtors, now we will subtract the new provision 2100. Stock will remain same, machinery will remain same, building will remain same. Creditors are decreased by 2500. So you will subtract 2500. Workman compensation, it is distributed among partner. General reserve, it is distributed among partner. Capital, the new capital will appear in the balance sheet. So this is your closing balance sheet. Now tell me, is this clear to everyone? Yes or no? Is this clear to all my students? Yes or no, guys? Okay, so now coming on to the next 8 marks question, which will be from the chapter Issue of Shares. So now coming on to this question, Saregama Limited invited application for issuing 80,000 equity share. The company is issuing 80,000 shares at a premium of 10 rupees. The amount was payable as follows: 30 rupees on application, 30 on allotment including premium of 10. So 20 nominal value and 10 rupees premium on allotment. On first call 30 rupees and on final call balance. So balance will be 30 rupees. Sorry, balance will be 20 rupees. So this is how the money will be received. Now you have issued 80,000 equity share, but applications are received for 1,20,000. So these are oversubscribed. The shares are oversubscribed and this is oversubscription. Allotment was made on pro rata basis to all the applicant. Excess money received on application was adjusted on the sum due on allotment. The excess money received on application, it was adjusted on allotment. Now first we will prepare over subscription table. सबसे पहले हमें क्या बनानी पड़ेगी? Over subscription table बनानी पड़ेगी. So let us first prepare over subscription table. So first applied, then allotted, then application received, then application due, then excess, then allotment due, then adjusted in allotment, and then bank. This is how the over subscription table will be prepared. Now the total applications received are 1,20,000. The total applications received are 1,20,000. But we can only allot 80,000 equity shares. We can only allot 80,000 equity shares. On application, we have to receive 30 rupees per share. So total application money received will be 1,20,000 multiplied by 30. So it will be 36 lakh. 1,20,000 multiplied by 30, it will be 36 lakh. So application money received is 36 lakh. Application money due, on allotted share application money will become due. So 80,000 multiplied by 30, it will be 24 lakh. So application money received is 36 lakh and application money due is 24 lakh. So excess will be 8 lakh. Excess will be 12 lakh. So excess amount received is 12 lakh. Now allotment will become due. So on allotted shares 80,000, allotment of 30 rupees will be due. So how much allotment is due? It is 24 lakh. Allotment due will be 24 lakh. 80,000 shares multiplied by 30 rupees. Now allotment due is 24 lakh and excess received is 12 lakh. So total excess will be adjusted towards allotment. Total excess will be adjusted towards allotment. So this is your oversubscription table. Now after this we will pass the journal entries. So first entry will be bank account debit to equity share application account. Bank account debit to equity share application account. The total application money received is 36 lakh. The total application money received is 36 lakh. So bank to share application 36 lakh and 36 lakh. Then we will pass the journal entry. Share application debit, total application money 36 lakh to share capital. How much amount will be transferred to share capital? Application money due. So application money due is 24 lakh and amount adjusted in allotment is 12 lakh. So to share allotment 12 lakh rupees. So this will be your second journal entry. Share application debit 36 lakh to share capital 24 lakh to calls in advance 12 lakh. After that allotment will become due and there is premium at the time of allotment. So the third entry will be share allotment debit to share capital to securities premium reserve. So share allotment debit total 30 rupees, to share capital face value 20 rupees, to security premium reserve premium 10 rupees. And you will multiply it with the allotted number of share 80,000. So 30 multiplied by 80,000 24 lakh, 20 multiplied by 18,000 16 lakh, 10 multiplied by 80,000 8 lakh. So this will be the journal entry for allotment money due. Now we have to do the main thing. Now we will do the main thing. So please be very attentive now. In the question, it is said that allotment was made on the pro rata basis. Excess money was adjusted towards sum due on allotment. Dhwani, who was allotted 1600 shares. Dhwani, who was allotted 1600 number of shares, failed to pay allotment money. So now we don't know that how many shares were applied by her. So you have to find it out because this is oversubscription. So now the applied number of shares are not given of Dhwani. So you have to find out. You have to follow those 3 steps that we have done in the previous sample paper. We have done a similar sample paper. So first step is to find out applied number of shares. How we will find it out? Keep applied in numerator, allotted in denominator and multiply with given number of shares. So applied number of shares is 1,20,000, allotted is 80,000. So 1,20,000 divided by 80,000 multiplied by 100, your allotted number of shares, your applied number of shares will be, sorry, why I'm multiplying with 100, it will be 600. The given number of shares are 600. We will multiply with the 1600. The given number of shares are 1600. So multiply with 1600. the applied number of shares will be 2400. The applied number of shares are 2400. Now we will do the second step. Second step is to find out the amount due on allotment. How much amount is it due on allotment? So on his allotted number of shares, on his 1600 shares, allotment of 30 rupees is due. So 1600 multiplied by 30, 48,000 rupees are due on allotment. It means we have to take 48,000 from him at the time of allotment. The third step is to find out the excess application money received. Third step is to find out excess application money received. Now, how we will find it out? You will find out the difference between applied and allotted. You will find out the difference between applied and allotted, which is 800. So 800 shares multiplied with application money, that is 30. On 800 shares, on the excess shares, he had paid application money in excess. On 800 shares, he had paid application money in excess. So the excess application money received is 24,000. Now, the allotment due is 48,000 and the excess application money received is 24,000, which means that out of 48, you have received 24,000. Out of 48, 24,000 is already received and the balance 24,000 is arrears. The balance 24,000 is arrears. So these are calls in arrears at the time of allotment. So these are calls in arrears at the time of allotment. So this will be subtracted at the time of application money received. So now we will pass the journal entry for allotment money received. Bank account debit to share allotment. Allotment money due is 24 lakh. Allotment money due is 24 lakh, out of which 12 lakh is already adjusted at the time of application. So 24 lakh minus 12 lakh and minus calls in arrear 24,000. Minus calls in arrear 24,000. So now how much money will be received? अब कितना पैसा receive होगा? 11,76,000. So 11,76,000. You can directly pass the journal entry bank account debit to share allotment. This will be the journal entry. Bank account debit to share allotment 11,76,000. There is no need to debit calls in advance and calls in arrear. You can directly write down the journal entry bank account debit to share allotment. From 24 lakh, we have subtracted 12 lakh. That is adjusted at the time of application. And we have subtracted calls in arrear 24,000. So now how much is received? 11,76,000. After that, first call money will be due. So share first call account debit to share capital 80,000 shares multiplied by 30, 24 lakh rupees. So share first call to share capital 24 lakh rupees. After the first call, it is said that so guys, sorry, this working note was not visible and no one is saying. So this is the working note, guys. Sorry, it was not visible. I forgot to get invisible. So this is the working note of those three steps. First, we have calculated applied number of shares. Applied number of shares will be equal to applied divided by allotted multiplied by given number of shares. So 1,20,000 divided by 80,000 multiplied by 1600 Your applied number of shares are 2400. Then second step is to find out amount due on allotment. So on allotted number of shares, allotment will become due. So 1600 multiplied by 30, allotment due is 48,000. Allotment due is 48,000. Now after finding out the second step, you will find out the third step, that is excess application money received. Excess application money received. So for that, you will find out the difference between applied and allotted number of shares. The difference between applied and allotted number of shares. So 2400 and 1600, the difference is 800. On these excess shares, he had paid application money 30 rupees in excess. So this is excess application money received 24,000. Which means that out of 48,000, we have already received 24,000. Out of 48, we have already received 24. So the calls in arrears will be 24,000 at the time of allotment. Now we have already passed the journal entry for allotment. After that, it is said that Sargam, who applied for 6,000 shares, did not pay the first call money. Sargam, who applied for 6,000 shares. Now Sargam applied number of shares are given 6,000. We have to calculate allotted number of shares. So how will you calculate allotted number of shares? We will keep allotted in numerator, applied in denominator, and you will multiply with given number of shares. So allotted 80,000, applied 1,20,000, multiplied by given number of share, that is 6,000. So 80,000 divided by 1,20,000 multiplied by 6,000, it will be 4,000. So how many shares were allotted to Sargam? 4,000. Now she is not paying first call. So she is not paying first call on his allotted number of shares. So on 4,000 shares, we are not receiving first call of rupees 30. So it will be 1,20,000. Also, Dhwani is not paying first call. So Sargam is also, Dhwani is not paying first call on 600 shares. And Sargam is not paying first call on 4,000 share. So on 5,600 share, we are not receiving first call of 30 rupees. First call is not received on total 5,600 share. So 5,600 multiplied by 30, your calls in arrear at the time of first call, they are 1,68,000. Calls in arrear at the time of first call, they are 1,68,000. So now when you will pass the journal entry for first call, it will be bank account debit, calls in arrears account debit to share first call. First call due is 24 lakh. Calls in arrears are 1,68,000 and bank will be debited by the difference amount. So 24 lakh minus 1,68,000, bank will be debited by 22,32,000. This is how much money is received on first call. Now, after the first call, after you have received the first call, these shares were forfeited. These shares were immediately forfeited. Dhwani, 1,600 shares are forfeited and Sargam, 4,000 shares are forfeited. So we will pass the journal entry. Share capital account debit, securities premium reserve account debit, 2 share allotment, 2 share first call, 2 share forfeiture account. Now, we are not receiving. We are forfeiting how many shares? We are forfeiting 5600 share, on which the called up value is 30, 20 and 30. The called up value is 70 because the final call is not yet made. On these 1600 shares, Dhwani is not paying allotment, and at the time of allotment there is premium. So on 1600 shares, 10 rupees premium is also not received. So premium is not received, therefore we have debited securities premium reserve. Then 2 share allotment. How much calls in arrears were there at the time of share allotment? It was 24,000. We have calculated this from the working note. We have calculated this from the working note. So it will be 24,000. Then 2 share first call. Calls in arrears at the time of first call are 1,68,000. Calls in arrears at the time of first call, they are 1,68,000. Now we have to find out that how much money is received on these shares. How much money is received on these shares? So on 1600 shares of Dhwani, we have received application only. And on 4000 shares of Sargam, we have received application and allotment both. So, on these 1600 shares, on these 1600 shares of Dhwani, we have received application. But she paid application on 2400 shares. She paid as application money on 2400 share because she applied for 2400 share. So 24 multiplied by 30. And on 4000 we have received application and allotment both. So 4000 multiplied by 50 because 30 application, 20 allotment, to total 50 rupees are received. So now you will do the total of this. 2400 multiplied by 30. 2400 multiplied by 30, it will be 72,000. And 4000 multiplied by 50, it will be 2 lakh. So total money received is 2,72,000. 2,72,000. So this is the journal entry for forfeiture. Just a minute. Share capital debit. Share capital debit 5600 multiplied by 70. 5600 multiplied by 70. Just a minute. We have done some mistake. Yeah. 4000 plus 1600. Just a minute, guys. I have to look at the question again. So, the called up value is 70, na? 30, 20, 30, 30, 50, 50 and 30. 80 is called up value. Sorry, the called up value is 80. It is not 70. The called up value is 80. So 5600 multiplied by 80, it will be 4,48,000. It will be 4,48,000. So called up value is 80, not 30. Then securities premium reserve on 1600 shares of Dhwani, we are not receiving premium of 10 rupees. Then 2 calls in arrear, they have done the total of allotment and share. They have done the total of allotment and first call. So out of this, 1,68,000 is of first call and how much? 24,000 is of allotment. So the total will be 2,72,000. 1,68,000 plus 24,000. So yes, total is. Okay, so these amount they are not in sequence. Their amount is recorded in the opposite manner. Two calls in arrears are 1,92,000 and the amount received is 2,72,000. So they are directly debiting. Just a minute. I have recorded it separately. I have recorded share allotment and share first call separately, but they have done the total. So 1,68,000 plus 24,000, it is 1,92,000. So they have recorded it together, but we will be recording it separately because that will be more clear. And to share forfeiture, it is 2,72,000. So there also it is 2,72,000. 2,72,000. Only the amount is recording oppositely. So this is the entry for share forfeiture. This is the entry for share forfeiture. Now these shares were reissued. These shares were reissued. So we have to go back to the question again. These shares were forfeited immediately and 2,000 of these shares, including all the shares of Dhwani, were issued to Tarang as 95 per share as 80 paid up. So 80 rupees a share is issued for 95. So it is issued at premium. So journal entry will be bank account debit to share capital to securities premium reserve. 2,000 multiplied by 95, 2,000 multiplied by 80 and 2,000 multiplied by 15 rupees premium. So this is the journal entry for share forfeiture. And after this, you will transfer the balance of share forfeiture to capital reserve, for which the journal entry will be share forfeiture debit to capital reserve. This you have to calculate yourself, as we have done a similar type of question in the class. So this you have to do yourself because we have done similar type of question. So at the end of the question, we have to transfer the balance of share forfeiture to the capital reserve, without which your answer is not complete. So this is a compulsory entry. The balance of share forfeiture 92,000 is transferred to capital reserve. So this question is for 8 marks and these types of question do come in your exam. तो ऐसे क्वेश्चन पक्का से पेपर में आते हैं. So we have to practice these types of questions. Now, as we have already exceeded the time limit, so let's do our next question quickly. So you will be getting choice in this question also. In shares, we will be getting choice. So 2 questions will come from shares chapter and you have to attempt only one. तो अब चलते हैं अगले क्वेश्चन पे. There are 3 parts in this question and all the parts are from share forfeiture. All the parts are from share forfeiture. So let's pass the journal entries. The first case is X Limited forfeited 10 shares of 10 each, 7 called up. So share capital account debit, 10 shares are forfeited and how much amount is called up? 7. So 10 shares multiplied by 7. On which shareholder had paid application on which we have received application and allotment of 5. So we have received. So it will be credited to share forfeited account, share forfeiture account 10 into 5. Out of 7 called up value, you have received 5 rupees. So calls in arrears are 2 rupees. So 10 multiplied by 2, these are calls in arrears. Now it is said that out of these 8 shares were reissued. Out of these 8 shares were reissued to Y for 8 per share at 8 per paid up share. So this share is issued for 8 rupees. Out of these 10 shares, 8 shares are reissued for 8 per share at 8 paid up per share. So the next journal entry will be bank account debit. The next entry will be bank account debit to share capital. 8 shares are issued for 8 rupees. So it will be 64. Now we have to transfer the balance to capital reserve. So how will you transfer the balance to capital reserve? This 50 rupees share forfeiture balance, it is on 7 shares. So 50 divided by 7, per share gain is 7.14. And we have reissued, sorry, just a minute guys. The share forfeiture balance is 50 rupees. The share forfeiture balance is 50 rupees and it is on 10 shares. Because we have forfeited 10 shares. So this 50 rupees balance, it is on 10 share. So per share gain is 5 rupees. Per share gain is 5 rupees. And we have reissued 8 shares. So 5 multiplied by 8, it will be 40. So 40 rupees will be transferred to capital reserve as there is no discount. So we will not subtract anything from it. So 50 share forfeiture balance divided by number of forfeited shares multiplied by reissued shares. So balance of share forfeiture divided by number of forfeited shares multiplied by reissued shares. So 50 divided by 10 multiplied by 8, it is 40. And if there was any discount, agar kuch discount hota, so that is to be subtracted. So this 40 rupees, it is transferred to capital reserve. Now coming on to the next part. So next part is L Limited forfeited Mr. M share who has applied for 600 shares. So this is over subscription because he applied for 600 and he was allotted 400. तो उसने अप्लाई किया कितने के लिए 600 के लिए, लेकिन उसको अलॉट हुए 400 and he failed to pay allotment money of 4 per share including premium of 2 on which he had paid application money of rupees 2 only. So this is very important. So let's do this one. This is over subscription short question. So share capital account debit. How many shares are allotted to him? 400. So we will forfeit 400 shares. He failed to pay allotment money of 4. On which he had paid application money of 2. Also, there is 2 rupees premium at the time of allotment. So first you have to find out the calls in arrears at the time of allotment. So the first step, we have applied number of shares 600. We have allotted number of shares 400. So there is nothing to do in the first step because applied and allotted both are given. Now second step is to find out amount due on allotment. The second step is to find out amount due on allotment. So 400 allotted shares multiplied by allotment 4. So allotment due is 1600. Now we will find out excess application received. Excess application money received. So as I always told you, find out the difference between applied and allotted. The difference is 200 shares and this has to be multiplied with application money 2 rupees. So excess application money received is 400. Now from allotment due, you will subtract excess application money and the difference will be calls in arrears. Difference will be calls in arrears. So calls in arrears are 1200. Calls in arrears are 1200. Now we will pass the journal entry. Share capital debit 400 shares multiplied by called up amount, it is 4 rupees. Then securities premium reserve account debit, because with allotment he is also not paying us a premium of 2 rupees. He is also not paying us premium of 2 rupees. Then 2 share allotment. 2 share allotment. How much calls in the arrears were there at the time of allotment? He is not paying us allotment and calls in arrears at the time of allotment are 1200. This we have calculated from working note. And then 2 share forfeiture account. On these shares he had paid application money of 2 rupees. And application is received on applied number of shares. So applied number of shares 600 multiplied with 2 rupees. So it will be 1200. So now you can check the debit is equal to credit. 1600 and 800, it will be 2400, and yes, so debit is equal to credit. So this is the entry for share forfeiture. This is the journal entry for share forfeiture. So whenever there is over subscription and forfeiture both are at the same time, you have to prepare that working note of 3 steps, because without that you cannot find out the calls in arrears. So this was the journal entry for share forfeiture in the second case. Now coming on to the third case, which is easy. Crown Limited forfeited 50 shares of 10 each for the non-payment of final call of 3 per share. So share capital debit 50 shares of 10 each. To share final call, we are not receiving 3 rupees on these shares. So 2 share forfeited, 2 share forfeiture. If out of 10, 3 rupees are not received, which means that 7 rupees per share are received. So 2 share final call 50 multiplied by 7 and 2 share final call 50 multiplied by 3 and 2 share forfeiture 50 multiplied by 7. Then out of these, 20 shares were reissued to Taj at 8 per share. Out of these 50 forfeited shares, how many shares we have forfeited? 50. Out of these, 20 shares are reissued at 8 per share. So 10 rupees share, it is reissued at 8, which means that these are reissued at discount. So now the journal entry for reissue will be bank account debit, share forfeiture account debit, to share capital. 20 shares are reissued at 8. 20 shares are given 2 rupees discount and the value is, face value is 10 per share. And then you have to calculate the balance which has to be transferred to capital reserve. Then we have to calculate the balance which has to be transferred to capital reserve. So these are the entry for forfeiture. This is for reissue. Now we have to calculate the balance that will be transferred to capital reserve. So balance of share forfeiture is 350. Share forfeiture balance divided by number of forfeited shares. 350 divided by 50 multiply by reissued shares 20. So it will be 140. From this you will subtract discount. So discount is 40. So 140 minus 40. How much amount will be transferred to capital reserve? 100 rupees. So equity share capital debit to capital reserve. 100 rupees will be transferred to capital reserve. So this is how we will do the entries, how we will pass the journal entry for share forfeiture. And with this, your second sample paper is done. Now we are done with another sample paper. We have completed sample paper 2. So tell me, is it clear to everyone? These 8 marks questions are clear to you or not? So I hope that all the questions were clear to you. If not, then you can let me know in the comments box below. And if you want to solve more than thousands questions, then you can join us on Pro Subscription. You can take Vedantu Commerce Pro Subscription, in which all these benefits are available, which will help you for sure in scoring good marks. Right now, the actual price of this Pro Subscription for 1 month is 1500, on which we are providing you flat 10% discount, after which you have to pay only 1350 for 1 month. So what are you waiting for, guys? If you want to score good marks in class 12, then go and take the Pro Subscription right now at flat 10% discount by using my promo code SCPRO. And I would love to see you all on Pro Subscription. For upcoming session and notes, you can join us on Telegram group Vedantu Commerce. The link is also provided in the description box below. And if you are new to our channel Vedantu Commerce, then please take a moment to subscribe to our channel for more such classes, and also do like this session and do share this with your friends. Now, see you all tomorrow at same time 3 p.m. Till then, thank you everyone for watching this session. I hope that you guys enjoyed it. If you guys have any doubts in this session, then please let me know in the comments box below. So, now see you all tomorrow. Till then, have a good day, guys. Good night. Have sweet dreams. Take care and keep preparing for your exams. So, bye. See you all tomorrow. Till then, take care.